to this Saturday class of Msl405, and in the last class, if you remember, we were discussing about P&L and balance sheet. Now what I will do is I teach a course called Management Accounting and Financial Management that I used to teach, which is a core course for BTech students who are doing a minor in management. Okay, and there we learn the basics about how to make a P&L and a balance sheet. So I will take you through that material. I have already uploaded this material on your Teams, so you can download it and go through it at leisure. Please understand that that material was created looking at generic companies, okay, and specifically manufacturing concerns. So the entire material may not be of direct relevance to you. So what I'll do is I'll go through that material and give you the basics about P&L and balance sheet and cash flows, and then I will take you through a different example which is based only on a startup. Okay, so don't bother about the examples and the numericals given in that material. That is for general companies. We will only do numericals or details only for startups. So I hope that that is clear. Is this clear, Ratnesh? Is this clear what I'm saying?
Yes, ma'am, it is clear, but I don't know what is PNL. I have
Profit and loss account. Ratnesh, is this the first class that you're attending?
no, ma'am. It is second class, but I don't know.
Second class. Okay.
Yeah.
How many classes have we had so far, Harshita?
This is fourth
Ma'am, this is
class.
the
Acha. So Ratnesh, what you do is now just go through all the material that I have put in. Okay. PNL stands for profit and loss, and we have already discussed a lot of it. But today I'm going to take you through that main material, which is the main thing. So that's good that you're here today. Okay. And if you have any doubts, any questions regarding any statement, any concept, please ask. Okay, Ratnesh?
Okay, ma'am. Okay.
Okay. And Ratnesh, have you done the prerequisite core courses?
No, ma'am. I have not done actually.
Then how have you got this course?
I have done registration on ERP, and I don't know.
Okay. Okay. Anyways. ठीक है. Okay, Ratnesh, you can unmute yourself now. Anyone else who has any doubts, any questions? Okay, fine. So now I'm going to share my screen. And then we will go to the material, okay? So Harshita, is this visible?
yes, ma'am, it is.
Okay, I'm just zooming in a little so that it becomes more visible to everyone. Okay, is this better?
Yes.
Okay, great. So as I told you, this was the material that we also share with our BTech students who want to do a minor in management, and this is one of their core courses. Again, they also understand the basic concepts of how to make balance sheets and profit and loss accounts, and why the balance sheet always tallies, the totals of the balance sheet always tallies, what are the broad contents of a balance sheet, of an income statement, okay, and the accounting principles which we have already done in this class as well. Okay, so I will just take you through some of the important things. So all of you understand that the balance sheet is the place where all the assets and liabilities are shown, and the profit and loss account is where all the income and expenses of the company are shown. So if you ever have any doubts, just see whether this is an expense for the company, whether this is an income, whether this is an asset for the company, or whether this is a liability, and accordingly it will go to that. Okay, so now see, let us look at this first example. Let us assume that a private limited company has been formed. Now, this is the first time that a company has been created. Okay, so we were talking about different forms of business organization, and I told you that the company is the most popular form of business organization, especially if you have a product or service in mind, because this is the only form that allows you to scale up exponentially. Okay, and this is the only form of business organization that allows you to access public finance by getting registered on a stock exchange and then issuing shares and debentures. Okay? None of the other business organizations would allow you to do that. Right? So we have already done all the business organizations. So let us assume that a private limited company has been formed with the name Royal Industries by a group of 10 friends, each contributing 3 lakhs in cash on 1st June in current year. As a result of this transaction, the company's balance sheet would appear as follows. Now look at this. As I have told you earlier, the balance sheet is always made on a particular day. Okay, on a particular day. It is like the snapshot of a flowing river, which is the company, right? And then this is the horizontal form of balance sheet that we are showing you here, just for illustrative purposes. Otherwise, all of you already know that the new balance sheet is in vertical format, where we show liabilities first and we show assets below it. Okay. So the capital that has been given by the 10 promoters of the company totals 30 lakhs. And this is a liability for the company, as you already know. Okay. Now, what is this company holding this liability in the form of? It is holding it in the form of cash. Okay. So on the asset side, we have cash worth 30 lakhs. And that is why the total of the balance sheet will always tally. Okay. Common sense suggests that cash should appear on asset side, but we have to find an answer why capital is shown on liabilities side. As I have already told you in the basic definition of a company, for accounting purposes, a company or business firm is considered as an entity separate from its owners or promoters, and this is the principle of separate entity. This principle requires that every business transaction is to be viewed from the perspective of the company and not from the point of view of its owner. So the accounts are always made with the company in mind. The company is making these accounts. Okay, the owners are not making these accounts. It is for this reason, therefore, that the capital represents liability for the company. Conceptually, company has the obligation to pay back to the owners. भाई owners ने invest किया है company में. The company will owe this money back to the owners. In the absence of this principle, we shall be constrained to determine the true income or loss of a business firm, as there will be no record either of capital bought in by the owners or withdrawals in cash off and on made by them. So, एक चीज, whether the owner is giving us money or he or she is taking out money for their own personal use, everything is recorded in the books of the company. Only then can we understand the true and fair financial position of the business. Okay. Now, let us assume further that out of 30 lakhs, 20 lakhs is deposited in a bank on 2nd June by Royal Industries. As a result of this transaction, it is imperative that cash balance will reduce to 10 lakhs and a new item called bank balance will appear on the asset side. So this is how it will be. Capital still remains 30 lakhs. Just that some of the cash, now you have opened a bank balance and you have a bank account and you have deposited money in the bank. So cash will go down and bank balance will increase by 20 lakhs, again giving you a total assets of 30 lakhs. Okay. So see how step by step the balance sheet keeps on getting populated. Okay. Any doubts, any questions, please ask. Then, assume further the company purchases goods worth 6 lakhs against cash payment on 4th June. So now what the company has done is, the company is a trading company. So they are basically buying goods from somewhere and then they are selling it to another market. Okay. So being a new firm, the supplier will not sell on credit to this company. He may not accept a check either. He may want cash only. So evidently cash reduces to 4 lakhs because 6 lakhs we have already spent, and a new asset in the form of stock of finished goods would appear in balance sheet. The stock of finished goods is basically your inventory. Okay. So again, the balance sheet will look like this. So all the capital has come in. Cash is of 4 lakhs. We have now bought inventory of 6 lakhs and our bank balance remains 20 lakhs. Hence the total capital, total assets also remains the same as total liabilities at 30 lakhs. Okay. Isn't this simple? Okay. What happens in our personal life to our cash balance, the same holds true for business records. Cash balance gets reduced when it is spent. Please note that no change has taken place in the bank balance as the firm has neither deposited into the bank any money nor has it written a check and withdrawn any money or in capital account. Two sides of the balance sheet again tally. Change is in the composition of assets only. This equality will always exist unless the mistake has been committed by the accountant. In operational terms, it implies that every business transaction has twofold effects. Now, this also we have done in one of the principles, which is called principle of duality or double entry. The treatment of additional transactions shown in this example will further reinforce this contention. Okay, so let us look at some more examples. But before that, any doubts, any questions that anyone has?
Ma'am, could you
Yes, Ronit?
ma'am, could you please explain the principle of duality again?
I'm sorry, principle of
Duality.
duality. Okay, Ronit. So, Ronit, every transaction will have a giver and a taker, right? Every transaction means that it has happened between two parties, right? So both the aspects of the transaction will be accounted for. So in this example, we had basically used cash as one of our assets to buy inventory, right? So cash account, you can say, is the giver account where money is going out of, and the inventory account that we have created is the receiver account or where money is going in. Okay, so we will always account for both these aspects. Okay, Ronit? Now,
Okay.
I'm trying to explain this to you in a very simple manner. Otherwise, when you actually do financial accounting, suppose you do an MBA in finance and there is a course on financial accounting, then you will go, remember I had given you the definition of accounting and I said you first create a journal, then you post it into ledgers and you create a trial balance. So all of these aspects are debited, credited in these accounts, and then finally from the trial balance we just post it into our two final accounts, which are the profit and loss account and balance sheet. So all this happens in the background. Okay, Ronit? But the main concept is that both the giver account and the receiver account are both shown. Okay, Ronit?
Okay, ma'am. Thank you.
Okay, well, anyone else who has any doubts, any questions?
Ma'am, I don't understand why do you call it duality? Because for a given transaction, it is quite possible that there might be more than two changes. As in, for example, in this example only, I could have given 3 lakh in cash and 3 lakh in check. So that
Sure.
would have.
No, so duality जब हम बोल रहे हैं तो हम receiver और giver बोल रहे हैं. You are absolutely right. Two people could be receiving or two accounts could be giving, but there will always be two sides of a transaction, right? I mean, money will exchange hands, so there will always be
Got
two
it. Got it,
sides of
ma'am.
the transaction. But you
Okay,
are
ma'am.
absolutely right. The giver can be two accounts. Cash से भी दे रहे, bank से भी दे रहे. Or the receiver can also be multiple accounts. So you're spending cash and you're buying furniture and equipment in one transaction. Okay, so all of this can happen, but basically what is the duality concept is that both aspects of the transaction, the receiving and the giving, will be recorded. Now, the reason why this is so important, Akshat, is because nearly 200 years ago, we didn't have this double entry system. We only had a single account, single entry system. And that led to a lot of confusion and understanding where the money is coming from or where the money is going, as the case may be. And so after that, across the world, after industrialization, they decided that every company will record both aspects of the transaction so that we are absolutely clear. So suppose I'm paying to a furniture provider, so I will also record both aspects, and the furniture guy will also record both aspects, that I've got this cash from Falana company, so that if we have to trace where the money is going, We have both aspects given in both entities' accounts. Okay, Akshar, that is the reason.
Got it, ma'am. Got it.
Okay,
Thank you.
great. Thank you. Anyone else? Any other doubts? Any other questions? I'm very happy that you guys are asking questions because these are the foundation building blocks, and especially if you've not done the core courses, then this is the first time that you're listening to these terms. So it is very important for you to get it clarified. Okay. Anyone else? Okay, cool. So I'll carry on. Please go through all of this material. It is new to you. Please go through all of it. Wherever you have any doubts, any questions, please ask. Even though the reason I'm sharing this material with you is that it's a very detailed piece of material. It's written in very simple language for students who don't have an official or formal background in finance, so that it's very easy for you to understand. Okay. Now, during 5th to 8th June, Royal Industries has cash sales of 5 lakhs for goods costing 4 lakhs. So basically, Royal Industries is a trading company and they have sold the goods that they had bought at 4 and they have sold it at 5. Okay, so they have basically made money. They have made a profit. Evidently, there is a decrease of stock by 4, okay, an increase in cash by 5 lakh. The difference between sales revenue and cost, so sales revenue is 5 lakhs and the cost that I had paid for these goods is 4 lakhs. So this difference of 1 lakh is profit. Okay. As a separate entity concept, profits are payable to owners and hence they are liabilities for the company. So when the company is making profit, who does this profit belong to? The owners, because the company is just a slave in the hands of its owners, as I've already told you in the last 3 classes. Okay. So typically, if you look at it, this is how the profit will be shown. Profit will be shown on the liability side, okay, because this money again belongs to the owners. Cash now has increased to 9 lakhs. The bank balance remains the same and the stock of finished goods now gets reduced by 4 lakhs, so we only have 2 lakhs. Again, you can see that the balance sheet is tallied. Okay. Let us suppose further. So I hope that this example is also okay. I'm going just one step by step. Wherever you have a doubt or a question, please ask. Now, let us suppose further that the company decides to venture into its own manufacturing activity. So now the company feels that we have money, so let us create our own factory, let us create our own manufacturing ability. Let's not buy from outside. Maybe we are able to make the same thing cheaper. For the purpose, the company buys a small industrial shed or building for 8 lakhs and machinery for 10 lakhs. The payment is made through check on 15th June. As a result, the balance sheet would be, please try to draw your own if follows. So I would again encourage you students that instead, because this is a virtual class, so I cannot see what you're doing on the other side, but if you can, please keep drawing these balance sheets as we do them in class. The more practice you have, the better you will be at it. Instead of just, listening to it and just reading it, please try and do it yourself. Okay. So here again, you see that the bank balance has now reduced to 2 lakhs, and by paying through the bank, we have bought a building or shed for 8 lakhs and we bought machinery worth 10 lakhs. Again, the balance sheet totals are tallying. Okay. It is important to note that the composition of balance sheet undergoes change with every business transaction, not necessarily in terms of the gross total. Thus, in a way, balance sheet is a snapshot of the financial position in terms of assets owned and liabilities owed of a firm at a particular point of time, say as at June 15. It is valid for that reference date or day only. Its position is bound to change on the following day as soon as a new business transaction takes place. So as I told you, it is like a flowing river. The business is like a flowing river and the balance sheet is just a snap that you take of that. Now assume that Royal Industries is relatively known entity and suppliers of goods or raw material are willing to transact business on credit basis. So now you are well known and the suppliers are okay with giving you products or material on a credit basis. Okay, so the company purchases raw material worth 3 lakhs from reliable suppliers on credit on 18th June. This transaction will be recorded in the name of stock or raw materials on the asset side, and since the sum is payable after the expiry of the credit period, say 30 days, to reliable suppliers at a subsequent date, will be shown on the liability side, and the two sides will tally as principle of duality. Okay. Again, would you like to do this on your own, or should I show it to you? Arka? Arka Mandal, are you here?
Yes, ma'am.
So are you solving this on your own, or do you want me to just show it to you?
We can try, but it will be better if you show us once.
No, but can you at least write down as a, on your piece of paper where it will go, how you will show it, so that
Hello, can anyone hear me?
Yes, ma'am.
Hi, can anyone hear me?
Yes, ma'am, I can.
Hi, class, can anyone hear me?
Yes, we can hear you.
Okay, we can't see Shweta ma'am in the class, right?
Yes, we can see, and I think she left the class.
Ma'am is not here, no? Okay, just give me a minute. Let me just contact her, okay? Stay put in the class, okay?
Yes, yes. Okay.
Can anyone hear me?
Yes,
Yes, man,
ma'am.
we can hear.
Okay. I think there was issue with my Teams. They showed the problem and then I had to reconnect twice. So it's working now. Okay, great. So I'm going to share my screen again. Did anyone else have any doubts or questions?
Ma'am, your voice is still breaking.
It's breaking. I've got
Ma'am,
connected
yes,
to my hotspot now so that there is no. Yes, Harshita?
ma'am, I think there is some network issue going on. Your voice is breaking a lot.
Okay, should I try and connect back again or something? Let me
No, ma'am.
increase the volume. Maybe that will help.
Uh,
Is it better
ma'am,
now? Is it better?
ma'am, yes, it's better now.
Ma'am, you
Okay,
can
okay,
close
fine.
your
So,
ma'am, you can close your video so that it could help your
yes,
Yeah.
yes, that's a good idea. I've closed my video. Is it better now, Ronit? Slightly
Yes, ma'am.
better?
Yes, ma'am, it's better.
Okay, great, fine. Fine. So I'm coming back to the material then. Okay. Fine. So over there, I was telling about the company now being able to buy goods on credit from a company called Reliable Suppliers. So we will see how we will show that. And also we'll expand further. The company is optimistic of business growth to finance expansion. It estimates additional. Yes, Shita?
Ma'am, I'm sorry, but I can't see your screen. Can anyone else see?
No, screen is not
Can't
visible actually.
Yeah,
Where is it? Just a second. Just is it now visible to you?
not yet, ma'am.
Harshita, is it visible now?
Not
Okay,
yet,
maybe there's
ma'am.
a lag. I think that is why. Okay. Just let me know when it is because it's showing me that it is visible. So just maybe there's a lag. So okay, let me see once again in case. Content screen. Is it visible?
Not yet, ma'am. I cannot see it.
Okay, fine. Just wait. Maybe it is there's some lag. and that is why it's not showing. Just let me know when it is visible, okay?
Sure, ma'am.
Ma'am, there are a lot of noise also from your side. Like voice is not actually clear.
No, there is no noise from my side. Is there anyone else who's unmute? Can you just mute yourselves, please? Is there noise? Because I'm sitting in a room. There's no noise at all.
Ma'am, I can't hear
This
any
thing
noise
is-
from your any background noise from your side, but we cannot see your screen.
Okay. Okay. Just a second. Just let me try and give the sharing rights again. I think there is some. Stop share content. Go to this. Can you see my computer screen?
No, ma'am, I cannot.
I is saying give control? I don't understand. Okay. Harshita, wait, let me do one thing. Let me
Yes.
just share the content from the Teams itself, okay?
Sorry,
Then
ma'am,
maybe
your
it
voice
will
got
keep you.
disrupted.
Okay, Harshita, can you open the document on your own side and share it?
Okay, let me try, ma'am. Let me try. Just give me a moment.
Or anyone else also, because the document is there in your Teams. In case you can just open it, I can share it, Mata, I can go through it with you. I don't know what the issue is. I think there's some Teams.
Ma'am, is my screen getting shared?
Yeah, I can see your screen. That is the screen I can see.
Okay, ma'am, can you see the material now?
Yes, I can. But I have to expand it a little, okay? It is coming in very small font size. And maybe you need to take the phone a little because it's coming in a vertical format. It's not showing the whole thing. But Harshita, just let me know if you can see this. Because now I'm trying to show from my Teams, okay? So share content from the screen. Is this visible now? Just see if my Teams screen is visible.
No, ma'am, not yet.
Or no?
No,
okay,
ma'am.
then you open it from your end only. I don't know what issue is there. I just don't know what issue is there.
Sure, ma'am.
Okay. So what you do is, Harshita, just tilt your phone so that it comes in landscape format, because in that format it's very small font size.
Okay, ma'am, sure. Just give me one second.
Your phone ना तो इसलिए और छोटा ही होएगा उसमें. Students, can you see this the chapter open in Harshita's phone? Can you see that?
Yes, ma'am.
Yes, better now. Okay, great. So Harshita, just come on down. There we were.
Just give me one second.
Okay. Yes. This is where we are. Okay, thanks. So I hope that it is now visible. Otherwise, students, all of this material is there on your Teams. Please download it on your own laptops and you can just follow it with us in case there is any issue in seeing the video or the screen. Okay? So, fine. So, Harshita, can I carry on then?
Yes, ma'am, sure.
Okay, Harshita, it is showing my name SS on your screen. Can you remove that or minimize that? It is showing it on the document.
Yeah, ma'am, is it fine?
Thanks. Okay, fine. Yeah, it is. So I said that the company wants to fund expansion and it estimates additional requirement of 10 lakhs. And for this, it negotiates a 14 loan for 3 years. State Financial Corporation against the mortgage of building and machinery and obtains a check on 25th June. So the company has done a lot of things in these 2-3 days. A, it has taken material on credit, and B, it has negotiated a loan for 3 years from SFC against the mortgage of building and machinery. Okay, so let us see the balance sheet now on June 25th. Harshita, we can scroll down a little. Balance sheet, yeah. Now, as you can see on the liability side, we have created another liability called creditors, who is reliable suppliers, who has basically given us material worth 3 lakhs on credit. अगर हमने इनको पे कर दिया होता, then we would have shown stock of material as 3 on the asset, and we would have reduced cash or bank balance जैसे भी payment किया होता on the asset side itself. But because we have not paid him, we have created a liability, and it is shown on the liability side. Then the 30% loan that the company has negotiated is also a liability. So that is also shown on the liability side. So, and because we have got a check from the loan provider, and the bank balance goes up to 12 lakh rupees. So this is how the balance sheet will look like after the transactions have been incorporated. Okay, so any doubts, any questions so far? Harshita, can you just scroll down a little?
Sure, ma'am.
Yeah. So over here you can see the first asterisk is the higher by the sum received from the SFC. That's a bank balance. The ownership continues with Royal Industries in spite of taking a loan, because as you know, whenever we take a loan, we always pay a fixed rate of interest, and that is it. Okay, the bank or the loan provider has no role to play in the management of the business. We have discussed all about shareholders and directors and all that, so you know. Okay, and in the three asterisks as a sum is payable, reliable suppliers are creditors. Okay. So this balance sheet is the most comprehensive we have drawn hitherto. It indicates that the firm owns assets worth 44 lakhs, and there are 2 sources of financing these assets, namely owners, jinka 31 lakhs laga hua hai, and outsiders, creditors and lenders, who have basically financed our business directly or indirectly to the tune of 13 lakhs. Being so, another useful way of visualizing balance sheet is that it is a statement of sources from where finances have been raised and resources in which the money has been invested. Okay, so all your liabilities are basically sources of finance, and all the assets have been resources that the company has created on its own, or the company owns. Okay. Evidently, sources being payable are liabilities, and resources being the ownership of firm are assets. Okay. Yeah, so Harshita, can we just go down a little? Yes, okay. In accounting, Harshita?
Yes, ma'am.
Liabilities are divided into 2 broad categories, that is internal liabilities, more commonly called owners' equities, that is capital plus profit. So all of this money belongs to our internal liability, that is our owners. So we call our owners our internal liability, and everyone else like banks or creditors, any other liabilities, we call external liabilities. Okay, that is consisting of contribution made by creditors and lenders towards financing assets of a firm. Okay. Accordingly, there can be more than one way of presenting the 2 sides of the balance sheet. But before we discuss that, any doubts, any questions on this? Okay. Harshita, you can scroll down now. Here, yeah, just stop here. All the time in a balance sheet, your liability side will always equal the asset side, showing that your sources of finance will always equate the resources that the company owns and creates. Okay. The owner's equity, that is all your promoters, owners' money, shareholders' money, plus all your external liabilities, which are all your external obligations, external equities, will always be equal to assets. And this equation number 3, is called the balance sheet equation. Okay. Then can you come down a little also? Yes, yes, just stop here. Thank you. Likewise, a business transaction can assume the shape in any one of the four possible ways. As we've already seen in these examples, if there is an increase in liability, it is followed by an increase in asset. Or if there is a decrease in liability, it is followed by a decrease in asset. Or you can have increase in one liability and decrease in another liability. Or you can have increase in one asset and decrease in another asset. So every transaction will either impact only the asset side or only the liability side, or can impact both sides of the balance sheet as well. Okay. Equations 1 to 3 are popularly known as fundamental accounting equations, and equation 3 is known as the balance sheet equation. Okay. Any doubts, any questions so far? Okay, cool. Now, continuing with our example of Royal Industries, let us assume that the whole stock of finished goods, that is costing 2 lakhs, has been sold on 45 days credit on 27 June for 2,60,000 to solvent buyers and company. Now, what you have done as a company is you have sold your product on credit. Okay, so basically you have sold it, but your customer has still not paid you, so you don't have cash left. In this case, you will create a debtor, okay, or an asset which is called debtor. Now, debtor is that customer to whom you have sold your product, but they have not yet paid you. Just like creditors are those suppliers who have supplied goods to you on credit. Similarly, debtors are those customers who have bought your goods, but they have not paid you. Okay. So, consequently, profits will increase by 60,000 because you said 2,60,000 of something that was worth 2 lakhs, and the changes in balance sheet will be shown like this. Now, as you can see, solvent buyers and company over here, you can see with an asterisk, is now a debtor. Okay, and that we have shown as 2,60,000 over here. And the profit that you have made is shown over here. And naturally, the stock that you had initially, that has now gone from here, indicating that you have made a sale. This is how you will show your balance sheet. Okay, can we come down, Harshita? Any doubts, any questions? Please remember to ask. Oh, now, during 28th to 30th of June, that is towards the end of the month, Royal Industries has incurred and paid in cash the following expenses. They have paid salaries of 30,000. They have paid rent of the shop for 10,000. They have paid electricity for 2,000. They have paid stationery for 2,000. They have paid refreshments for 3,000. They have paid telephone, postage, courier charges. They have paid miscellaneous expenses. So total expenses that they have made are 50,000. Okay. So can you come down a little?
Yes,
okay.
ma'am.
As profits are liabilities as per separate entity concept, by the virtue of the same principle, expenses and so the losses are assets of the firm as they are claims of the company on owners. Expenses are to be borne by owners. As a matter of fact, profit figure is to be taken in balance sheet should be net of expenses. Okay, and in practice, it is that way only. So, abhi tak what we were doing was profit to a balance sheet without accounting for any of the expenses. But that is not true. Whenever you have any profit, whenever you have any revenues, you incur a lot of expenses in running that business. So ideally, the profit should first take care of all of the expenses, and then only the net figure should go into the balance sheet. Okay. So every profit figure shown in balance sheet is at inflated value. In accounting, it is known as gross profit, that is selling price minus cost of goods sold. Since expenses reduce gross profit, net profit for Royal Industries will only be 1,10,000. Okay. So eventually this will be the net profit that will go into the balance sheet. So basically, whenever we look at all the revenues minus the expenses, we first create the profit and loss account, and from the profit and loss account, the net profit figure is what goes into the balance sheet. Okay, so let us come down, Harshita. Okay. Thus, assets consist of cash, bank balance, and similar other valuable resources owned by a business firm, say buildings, machinery, or for which it has a legal right to receive, say debtors from the others. Okay.
Yes, ma'am, coming down.
Okay. Now let us look at the profit and loss account. In the example related to Royal Industries, the effect of every business transaction was shown by drawing a new balance sheet each time. In practice, it just does not happen. Balance sheet is not prepared on a daily basis. It is drawn after some reasonable period of time, say a month, quarter, half year, or a year. Moreover, it is not practical to do so. In a day, there may be numerous sales transactions. You can imagine in a large company, which is a multinational, there can be millions of transactions in a day. Okay? It may not be practically feasible to determine profit earned or loss suffered on each sales transaction. Above all, this modus operandi destroys the earlier set of data. Whereas the owners and others, in fact, mandatory for income tax purposes, will be interested in having access to the full set of data to comprehend the financial health. Okay, and therefore it is not desirable also. But these days, students, we have a lot of software tools like Tally and all, where every time you keep entering any transaction, it automatically creates P&L, balance sheet, everything real time, and you have all the data with you real time. Okay. So from the above, it is imperative that there is a need of an account or a statement which provides full account or description of all the items affecting the profit of a business firm. So such a statement which meets this requirement is known as income statement or profit and loss account. और इसको हम लोग P&L भी बोलते हैं, P&L short for profit and loss. Okay. In broad terms, revenues, as the name suggests, are the incomes which mainly accrue to the firm either by the sale of goods and services or by investing the resources of the firm outside. And in contrast, expenses are the costs incurred in realizing or earning these revenues. Thus, P&L account is concerned with matching of the revenues of a certain specified period with the expenses of that period. Okay, this is called the matching principle. So if you're showing the expenses, revenues for 1 year, then you should match it with the expenses of that 1 year, not for 11 months, not for 13 months. Okay. More is the accuracy of this matching procedure system, more correct is the income determination. In other words, preparation of profit and loss account is based on matching principles. So we've already done this. Let us attempt to prepare the P&L of Royal Industries for the month of June. Since this account represents items related to revenues and expenses of a firm, this account obviously is required to have two sides. One is your revenue side, that is by convention it is taken to be the right side of the P&L, and the other is the expenses side. So let us see how the P&L looks for this. Okay. So typically in a P&L, what you will do is you will first start with the revenue. So this is how the P&L account looks. Profit and loss account for Royal Industries for June, whatever year you're talking about. You create, okay, you write expenses, then amount in rupees, you write revenues, then amount in rupees. Start with the revenues. We know that the total sales revenue in that year has been 7,60,000. Okay, there has been no other income. Then we have cost of goods sold, which is equivalent to cost of goods purchased and sold. Harshita, can you mute yourself?
Yes, ma'am. Just
So
allow me. Ma'am, but my screen share will stop. Just give me 1 second.
Okay. If you mute yourself. Oh yeah, it has stopped. Okay. Let me see if I can share my screen again.
Just give me 1 second, ma'am. Share it.
Can you see my screen now, Harshita?
No, ma'am, I still can't. If anyone, one of the students can see,
Okay.
that will also work.
Students, can you see my screen?
No,
No,
ma'am.
ma'am. No.
Okay, fine. Harshita, you only will have to show it.
Sure, ma'am. Just give me 1 second.
But why is it that if you're muting yourself, then the share screen thing is going? Let me see if I'm able to use my Windows. This window. Is it now visible?
No,
No,
ma'am.
ma'am.
Any? No. Okay.
Ma'am,
I
yes,
think
now
there is
it's
some
visible.
major.
Ma'am, now it's visible.
Is it? Is it visible?
Ma'am, yes, I can see it now.
Okay. And the others, the students, do you see this?
Yes, ma'am. It's visible now.
Okay. Okay. Fine. So Harshita, you can stop your sharing of the screen.
Yes, ma'am, I've stopped.
Okay. Fine. Okay. Now, so let us look at the P&L for Royal Industries for June. Now here what has happened is you can see the sales revenue worth 7,60,000 given on the right side over here. And over here we have cost of goods sold. It is also called COGS, cost of goods sold. This is basically in case you have a trading firm. This is all the things you expect to buy. And in case you have a manufacturing concern, that this will take care of all your direct manufacturing cost. Okay, so basically if you're making a car, then all the direct labor that goes into making the car, all the material that goes into making the car, all the overheads that go into making the car, that is what is shown here, the actual cost of making your product. Okay, so that is called cost of goods sold. So over here we see the cost of goods sold is 6 lakhs, and this rise to the first profit figure, which is called gross profit. Gross profit, you must have heard of a lot of the times. In fact, you must also have heard of gross margin. It is what this means. Okay, gross profit is nothing but sales minus COGS, cost of goods. That is your direct cost of making a product. How much was that? That is called your cost. Then we get a gross profit here of 1,60,000. We bring it down after drawing a line after the calculation of gross profit. We bring it down on the right side again, and now from this gross profit, we take out all the other incidental expenses for running our business, which are not directly related to making of the product. So we may have to our office staff, rent, electricity, stationery, refreshments, telephone, other miscellaneous expenses. Okay, so we have shown all of this. This is 50,000 worth of expenses. And now we have the net balancing figure, which is called net profit of 1,10,000 rupees. This is the money which goes finally to the P&L. Okay, so this is just a very simplified way of making a profit and loss account. Any doubts, any questions, please ask. Okay. Please think of any other expense, anything that you are confused about. Anyway, we'll go through more examples, so it will be clear. From the foregoing, it is apparent that the P&L account provides a candid and condensed summary of all revenues and expenses of the firm for a specified period at one place. The rule provides a crystal clear view to the net profit of 1,10,000 has. It may be recalled that such that picture was not plausible in the balance sheet, because balance sheet में हम expenses वगैरह नहीं दिखा सकते हैं. In fact, balance sheet is not intended to provide the same. It is just intended to give us the assets and liabilities position of the company. Thus, income statement constitutes another significant financial statement of a business firm. It is an important supplement to the balance sheet. In fact, there exists an interlocking relationship between the two. P&L account provides a summary figure of all items related to revenues and expenses of a firm in terms of net profit loss to balance sheet. Evident, but for net profit or net loss account, the balance sheet will not balance. Net profit or loss is a yes, Harshita?
I'm sorry for interruption, but I cannot see your screen move. I can still see that P&L account only. Is
Oh,
it the
but
same?
I've come down. What about the others? Have you see? Can you see me scroll down?
No, ma'am. It is just the
अरे तो और
profit
कोई
and loss
बोल क्यों
account.
नहीं
Ma'am, it is just the profit and loss account. We can't see scrolling.
That is a why करो ना? If you can't see, you're waiting for to tell us. But why is that happening? Just let me share the screen. Why is it happening? Okay. Can you see this new sheet now, page 9?
No, ma'am, I cannot see your screen.
No, ma'am, it is not visible.
You
yet.
can still see it. You can still see the panel.
No, ma'am. No, ma'am, it is not
Harshita?
visible at all now.
No, ma'am, nothing is visible now, ma'am.
Nothing at all. Okay, I don't know what is the issue with my screen. It was showing now. Again, let me see if this is it visible now?
No, ma'am, not on my end.
Harshita?
No, ma'am, not at my end.
Okay, let me try the. I can hear you. I can hear you. Let me try the Windows thing again and see if this docx file is this visible.
Not yet, ma'am. I cannot see.
Okay, Harshita, फिर तुम अपना ही screen share कर दो. I think there is an issue with my Teams. It is not allowing me to share.
Okay, sure.
Harshita?
I keep myself muted, ma'am, but I'll just keep on scrolling down when you'll finish the sentence.
Yes, please do that. And students, please be responsive. Don't wait for Harshita only to tell you. You are the students, the team. Please be responsive and you can tell me when you're not able to see the screen or something immediately. Okay. There seems to be some issue with my Teams. It is not allowing me to share. Okay. So Harshita, can you scroll down a little? Yeah, just stay here. I hope that all of you can see Harshita's document. I hope that Ratnesh, I hope you
Yes, ma'am. Yes, ma'am. It is visible.
Okay. Okay, great. Thank you so much, Ratnesh. Let me just maximize this for my own. Okay. So again, the tallying of the two sides of the balance sheet perplexes the beginner. He wonders how such a thing happens with innumerable transactions of revenue expenses. So naturally, when you're making it for the first time, you keep wondering as to how every time the balance sheet total keeps tallying. But this is how it happens. Separate entity concept of accounting provides the explanation. As per the concept, revenues, since payable to owners, will augment the owner's equity capital in expenses, since receivables from owners will cause decrease. Harshita, can we scroll down? In it, yes, you can stop here. As a result, the surplus, that is profit or deficiency or loss as per the situation, is transferred to the capital account. So let us see again in the context of Royal Industries how that happens. Capital that was there in the beginning was 30. To this, we added the sales revenue during June of 7,60,000, less expenses during June of 6,50,000, and from that we got the capital or owner's equity including profit of 1,10,000. Okay, so this is how we get the effective capital or the net capital belonging to the owners. We hope by now you have acquired, based on the example of Royal Industries, some basic understanding of balance sheet as well as income statement, besides knowing some accounting principles. There is a need to learn additional accounting principles or concepts to gain better understanding of these two financial statements. A brief account of these is provided in this section. Okay, so can you scroll down? These accounting principles, if you remember, students, we have already done. So I'm just going to scroll through these. Harshita, can you slowly scroll through the accounting principles? Money measurement concept, going concern, cost concept. We have already done all of this. Harshita, can you scroll down? Okay, conservative concept, accounting period concept, all this we have already done. Okay, so you can read it once again. The accrual concept. Okay, next. So all this we have already done. The matching principle. Okay, so this is just the detailed written version of all of these accounting principles, which you can read at your leisure. Consistency principle. We've already discussed this in the first 3 classes. Okay, so this is now the summary of the key points. Basically, whatever we have discussed, all of that has been summarized and the key points have been given to you so that you can look through this and again you can get all of the statements in one go. Okay, so this is the summary. Okay, then these are some. Okay, so let's try and do this. Fine. So indicate whether the following statements are true or false. So when I say the balance sheet indicates the market value of the firm's total assets, is it a true statement or is it a false statement? Who can tell me? Take a guess. It can only be true or false. Ratnesh, batao.
I think it is true.
The market value of the firm's total asset, do you think, or Ratnesh, do you think it always shows the asset at cost? That is, जिस cost पे आपने उसको खरीदा था.
Asset at cost. Asset at cost, I think. Yeah. I don't
Yes, Ratnesh, always. So we have already done the cost principle, which says that balance sheet will always be shown at cost. That is, what was the cost at which you had acquired that asset. Okay, it will never indicate the market value of the firm's total assets. Balance sheet is always made at cost by principle. Okay, because if you have spent 1 lakh rupees to buy a piece of land 10 years ago, it does not matter if that same piece of land is worth 1 crores today. To give a true and fair picture of the company's books, you will show the exact amount that you had spent as a company to buy that asset. So always shown at cost. Okay. However, when the companies are going through a corporate restructuring exercise or are looking for joint ventures or acquisitions or something like that, then they also create a second balance sheet which shows the values of the assets based on market value, because they're trying to negotiate price based on market values. Okay, so then a second balance sheet can also be created, but otherwise balance sheets are only created at cost. Okay, so this is false. Then the second is totals of the two sides of balance sheet always tally. Is this true or false? Arka, is it true or false? Ratnesh?
It is true.
रत्नेश कर रहा है. वेरी गुड रत्नेश, वेरी गुड. और कोई भी आंसर कर सकता है. ओके, then accounting is a record of all important business events. Who can tell me whether this is true or not? All important business events का record है accounting. रतेश तुम मत बताओ, someone else can tell me. Arka, do you want to attempt answering this? True. all kinds of business. Okay, only the ones that can be related in terms of money, Arka.
Yes, ma'am. But business events are mostly in terms of money.
No, so all important basically important business events could be the launch of a product, could be the company going out into a transaction that can be measured in terms of money. We cannot record it. So many business events. Suppose the CEO of company dies, he retires, someone else comes in. This is an important business event, but we cannot record it unless it is in money terms. Okay, Arka, this is called the money measurement. Okay, Arka?
Yes, ma'am.
Then owner's equity implies owner's capital contribution. Is this true or is it false? कि owner's equity जब हम बोलते हैं तो सिर्फ it denies the capital made by the owners. Dinesh, do you want to try this?
It is false.
Dinesh?
Yes, ma'am.
Ron,
Ma'am, it's false because owner's equity also implies to the profits.
very good, Ronit. Very good. Dinesh, you were very late in answering. उससे पहले Ronit ने already answer कर दिया है. You can take the next one. Okay? Thank you, Ronit. Very good. Fifth one, balance sheet will not tally if assets have been stolen. हाँ, बताओ.
Ma'am,
Dinesh, बताओ.
yes, ma'am. Balance sheet will always tally.
अच्छा, अगर assets चोरी हो गए तो क्या होगा?
अगर assets चोरी हो गए हैं
क्या होगा? हाँ.
तो मैम आई गेस असेट्स साइड से तो वो हट जाएगा, मतलब जितना भी एसेट्स चोरी हुए हैं, और आई गेस उसका कोई इक्वल इफेक्ट लायबिलिटी साइड में भी आना चाहिए.
लायबिलिटी पे क्या इफेक्ट आएगा, बताओ क्या हो सकता है? ओनर अपना पैसा क्या करेंगे, मतलब अपना पैसा भी हटा लेंगे क्योंकि एसेट भी हट गया है इसलिए. टिपिकली अगर एसेट चोरी होता है, मशीन है, कुछ है, चोरी हो गई, क्या होता है? वो कंपनी के क्या हो गया? वो लॉस हो गया कंपनी के लिए. दिनेश?
हाँ, यस मैम.
दिनेश, वो लॉस हो गया कंपनी के लिए क्योंकि एसेट चोरी हो गया तो लॉस हो गया.
हाँ.
भाई एक्सपेंसेस हम बोलते हैं हम खर्चा उठा रहे हैं, लेकिन अगर कुछ चोरी हो जाए या आपकी शिप डूब जाए, मटेरियल आपका चोरी हो, तो लॉस हो गया ना वो बिजनेस के लिए. आग लग गई, उससे एसेट आपके जल के खत्म हो गए. तो ये तरह के लॉसेस होते रहते हैं. तो ये लॉसेस को भी तो हम अपने बैलेंस शीट में इंक्लूड करते हैं ना. जैसे हम कैपिटल को बढ़ाते हैं अगर हम प्रॉफिट हो रहा है, तो उसी तरह हमारा जो ओनर है उसी का कैपिटल इरोड होता है अगर लॉसेस हो रहा हो तो. ठीक है दिनेश?
हाँ.
Then liabilities are claims against all the assets. Who will take this? Hitesh, are you here? Hitesh Kumar?
Yes, ma'am. Actually, ma'am, I think that
Hitesh, bata.
Ma'am, it is a false statement, I guess.
It is false. Why do you say
Ma'am,
that?
the assets are claims against the liabilities, not the liabilities are claims.
नहीं, ये
Hello.
हाँ, बोलो Hitesh, I can hear you. Can you hear me?
No, ma'am, your voice is breaking, ma'am. Have you said anything?
Okay, Hitesh, can you hear me now?
Yes, ma'am.
So Hitesh, where did these assets come from? How did the company make these assets? Only when it had some source of finance coming in?
Sorry, ma'am, unable to hear you.
Yes or no?
Your voice is breaking, ma'am.
Okay, can anyone else hear me? Mohit, are you here? Can you hear me?
Yes, ma'am, we can hear you.
Please mute yourself. हाँ, Mohit, are you Mohit Goswami, you had unmuted yourself. Are you here? Mohit, can you hear me?
Yes, I can hear.
Okay, so Mohit, can you tell me whether this statement will be true or false? Liabilities are claims against all the assets?
I don't have much clue, ma'am.
You don't have much clue about it? Okay, let me give you example because two people are struggling with this. So liabilities are basically the people who have given us the sources of finance. Okay, Mohit, you can unmute, you can mute yourself. So first, our promoters, our shareholders had given us money, and from that we had cash. Because of that, we had cash, and from the cash, then we bought different kinds of assets. Okay, so basically, the people who have given us money are the people who basically have a claim on the assets, right? So liabilities are basically the people who will have claims on the assets. Okay, Harshita, can you scroll down a little more? Okay, yeah. Don't show the answer, Harshita. Okay, anyway. Now the eighth one is expenses are recognized. Seventh one is revenues are recognized not at the time of credit sales, but when cash is realized from debtors. So who can tell me whether this statement is false or not? Nitesh, are you here? Nitesh Dagar?
Yes, ma'am. I think it's true.
Nitesh, batao. That we will only show revenues when cash is finally collected from debtors. We will not show it the day the sale is made. Nitesh?
I think so.
But Nitesh, you saw in an example, we had seen that we had sold our material to someone or our product to someone, but they had not paid us cash and we created a debtor. Do you remember that?
Okay, ma'am. So it
Right?
will be false. Yeah, ma'am.
Yes, so it will be false. Revenues will be recognized when they happen. If we have got cash, then we will show cash increasing. If we have not got cash, then we will show another asset which is called debtors. We are basically customers to whom we have sold our products, but they have not paid us back. Okay, so they will. This is the accrual principle. We will record our sales the moment it occurs. Okay, Nitesh.
Okay, ma'am.
Okay, fine, thanks. Then expenses are recognized as and when they are incurred. Is this true or not? Ratnesh, you can take this one.
Ma'am, I don't know. I can't say about that.
Okay, so now again, Ratnesh, as per the matching principle, suppose we have to show 1 year's revenues and 1 year's expenses. Then suppose I pay my salary on the 7th of every next month. Okay, so for people who work through March, I pay my salary on 7th of April. But I'm closing my books of account on 31st of March, right, as per the financial year. So for that whole period of March, salaries have already occurred, right? We have to pay people work for 31 days. So we'll include this salary expense because it has occurred, okay? Whether we have paid or not, it does not matter. If we have not paid, then we will show it as a current liability called salaries payable, okay? Then next, balance sheet is prepared for the year. This is an easy one. No, it is prepared on a particular day. An income statement is prepared for the year. Yes, it is always prepared for a year or a quarter, and it becomes an account of all the revenues and expenses that have happened. So, Harshita, can you show us the matching of the true false answers with that? So, this is the answers. Okay. Fine. This is all with you, students, so you can look at it at your leisure also, and you can note down whatever doubts or questions you may have, so that we can discuss it in class as well. Okay. Now, I think this name the accounting concept or principle. A lot of students who have not attended the accounting principal class may not remember, but let's try. Name the accounting concept or principle which enables the following to happen. Profits are recorded on liability side and losses on asset side in balance sheet. Harshita, can you show us the principle's name? Okay, this is because of the separate entity principle. That is, the company is an artificial person in the eyes of law. Everything that comes into the company as a source of finance is shown as a liability, and everything that the company creates, the resources that the company creates from these liabilities, are shown on the asset side of the balance sheet. Similarly, the profit that is gone that is made belongs to the shareholders, and hence it is shown on the liabilities side. Totals of the two sides of balance sheet will always tally unless the accountant commits a mistake. Yes, this is true, because if we are taking care of the duality concept, that is, we are taking care of both aspects, where the money is going from, who is receiving the money, then we will always have the correct balance sheet. Only if there is a mistake will the balance sheet total not tally. Okay. Then the third statement is accounting does not record the health of the CEO of the company. So this is an event, suppose the CEO falls really sick or meets with an accident, cannot be shown in the balance sheet of P&L. This is because of the money measurement principle. Okay. Only those transactions that can be recorded in terms of money can be shown. Okay. Then stock is valued at cost or market price, whichever is lower. Only cost. Okay, we follow the conservative principle. You might say, ma'am, you bought your asset 10 years ago, now it is so much. Okay, we will not worry about that. We will only look at the actual cost, okay, of the inventory. So this is called the conservative principle or the cost principle. Income is measured as difference between revenues and expenses. I think this can be the matching principle. Plant and machinery, buildings and other long-term assets are not valued at their realizable market values in business records. They are not shown at market values. This is the cost principle. Okay. Loss suffered by owner by disposing of his personal car is not recorded in the books of the firm because of the separate entity concept. Whatever the owner is doing, that is his business. The company will only record the transactions which are relevant to the company. Okay. There is a need to provide for expenses payable to determine true income. This is called again the conservative principle. Okay. Harshita, can you show me the names of the principles that they are? Okay, 8 में accrual दिखा रहा है. नीचे आ जाओ, नीचे वापस मतलब can you go back to the statements again? Okay. Now, a need to provide for expenses payable to determine true income. They are saying accrual, and that means that in case the expenses are occurring, then you will show it as per the accrual statement as well. Now, in this, in case there are any provisions to be made, then that will come under the conservative principle. Okay. Revenues shown in income statement need not necessarily be realized in cash. That is what we were discussing right now. Even if your customer has not paid you money, we will still show that sale as happened. Okay, so that is the accrual principle. There is a need to provide for losses possible to take place in the future. Suppose you feel that I have made so many sales to customers and I've created so many debtors. Now there are chances that some of these debtors may not pay us back. Okay, that means we can record a loss on that sale. They might either die or become bankrupt or just say that I will not pay you. Okay, so the conservative principle of accounting says that you have to create provisions for such debtors, and we create provision for bad debts, provision for losses, and that is the conservative principle. Okay, so we have done all of these principles, but today lot of you were not able to recall them. So I would request all the new students who have got added in and have missed the previous classes to please go through the recordings, please go through the material so that you're up to date with the rest of the class. And in case you have any other doubts, any other questions, you can please ask. Okay. Now let us do these fill in the blanks out of the choices that are provided. So liabilities plus what? Capital or owner's equity is equal to total assets. Who can tell me? Dinesh? Dinesh, are you here?
Yes, ma'am.
Dinesh, do you want to take a guess? Liabilities plus what will be equal to total assets?
Liabilities plus ma'am, isn't liabilities is equal to assets?
But liabilities may remember when we looked at the balance sheet equation, we split it into two. One was internal liability, one was external liability.
Yes, ma'am. Yes,
remember the balance sheet equation that we have just done?
Yes, ma'am.
So what was that equation?
Ma'am, the first one was the capital we had, and the second thing was the loan, etc.
No, Dinesh, the balance sheet equation. It is liabilities plus owner's equity is equal to total assets. So here liabilities denotes all the external liabilities and owner's equity denotes all the owner's share capital plus all the profits that the company has made over the years. Okay. If you remember, Ronit had also answered that, ma'am, owner's equity would include the profit that has been made. You remember that, Dinesh?
Yes, ma'am.
Okay, great. Thank you. Thank you. The next is total liabilities, that is external plus internal is equal to now. So I think we have already got the answer from our discussion with Dinesh, but Hitesh, do you want to take a chance? Hitesh?
Yes, ma'am.
So Hitesh, बताओ इसका क्या होगा? Total liabilities, that is external plus internal, दोनों मिला के will be equal to total long-term assets की total assets?
Total assets, I guess.
Very good, Hitesh, very good. Okay, thank you.
Okay.
Next, the whole sum of dash, that is revenue expenses or capital expenditure, is charged in one accounting period. What is charged in one accounting period? Are all the revenue expenses charged in one accounting period ki capital expenditure? So Mohit, do you want to take a guess on this?
It will be revenue expenses.
Very good, Mohit. All the revenue expenses that have taken place in that year will be recorded in the P&L account for that company. Very good, Mohit. Okay. Next, अच्छा अब ये deferred revenue expenses तुम लोग को पहले बताना पड़ेगा कि ये क्या होता है. Deferred revenue expenses are normally written off in one accounting period or more than one accounting period. Let me first tell you what deferred revenue expenses are. Suppose the company undertakes a massive promotional exercise. Okay, so for example, company IPL team को वो कर रही है, sponsor कर रही है. Okay, then this is a massive promotional advertising expenditure, the benefits of which are supposed to occur more than 1 year. Okay, or they're supposed to impact the sales of the company for more than 1 year. So what we do is, instead of, if we had shown all of the expenses in 1 year only, तो नेचुरली हमारा एक्सपेंस साइज ज्यादा हो जाता तो हमारा प्रॉफिट कम हो जाता. So our income tax authorities allow us to defer our revenue expenses which have been of a large nature to years तक में उसका हमको benefit मिल रहा है. Okay, so generally when we do such campaigns, the benefit of that campaign or that promotion is supposed to give us the benefit for more than 1 year. Okay, so in this, deferred revenue expenses can be written off in more than one accounting period. You don't have to worry about all this for this course students, because startup में deferred revenue expenses वगैरह आते ही नहीं है, क्योंकि hand to mouth जीरो के पास इतने पैसे होते ही नहीं है कि वो इतना massive exercise कर सके, unless of course they have come into the rapid growth stage. Okay. Next, sales revenue minus cost of goods sold is gross profit or net profit? This is very easy. Nitesh, what is it? Very easy. We have already discussed this 2-3 times. Nitesh Dagar, are you here? नितेश, लगता है नितेश जो है वो क्लास में रजिस्टर करके और फिर खुद गायब हो गया. रत्नेश, do you want to take this?
Yes, ma'am. It is gross profit.
Very good, Ratnesh. Very good. Thank you. Okay. Then one who lends money is the creditor or debtor. जो आपको उधार पे पैसा दे रहा है, जो सामान दे रहा है, वो आपका क्रेडिटर है कि डेटर है? रोनित?
Yes, ma'am.
हाँ.
Ma'am, I think.
रोनित जो आपको, हाँ बोलो रोनित.
The one who gives the money, I think it's the creditor, because.
Yes, very good, Ronin. Debtor तो वो customer है जो जिसको कि हमने product दे दिया and he owes us money, right? We will collect from him, right?
Yes, ma'am. Yes, ma'am.
Okay, good. Thanks. Owner's claims are referred to as owner's equity or liabilities. Razi? Razi, are you here? राजी अहमद, राजी भी आई थिंक नितेश की तरह ज्वाइन करके और फिर इधर उधर घूम रहे हैं उन लोग. सचिन, आर यू हियर? सचिन? Sachin is also doing the same thing. These are students who have just connected themselves, but they are just walking around. Okay. Anyway, I will answer them because there are only 8 students. We have already run out of students and also time. So owner's claims are referred to as owner's equity. Okay. The firm will continue to operate year after year in foreseeable future as per the going concern concept. All of you have done the going concern concept. A company once formed will continue to exist perpetually unless, of course, it is brought to a legal end by an act of law. Okay. Assets are resources of a business firm. Liabilities are sources for the business firm. Profits determined in accounting are, Harshita, I can't see the, okay, are they 100% precise or estimated ones? The profits that are determined are estimations because we are looking at debtors and we are looking at creditors as well. So it is not 100% precise. Okay. So you can see the answers. Harshita, can you show the answers? Okay. And Harshita, can you scroll down further? Now, these are some exercises which you can do, okay, and after you read the material, see if you can answer these questions. What else? Harshita, is this true?
Yes, ma'am, it's done.
Okay, fine. So right on time. So students, please, I think now we have the final list of students with us and I can see 80 students, but I can only see 8 students in class, which is a very, very poor attendance. And I don't know how they would do well in this course if they don't attend the classes. But please, all of you have joined late. Ratnesh, go through all the material, go through all the slides that we have already covered. In case you have any doubts, any questions, please carry it to the class and I'll be very happy to take it up with you. Okay, everyone? Thank you then. I'll see you on Tuesday. Okay, Ratnesh, all the best. Thank you so much. Thank you, Harshita. Thank you, everyone. Thank you. Take care.
Thank you, ma'am.
See you. Bye-bye. Thank you. Thank you. Bye bye. See you.